right, so here in this video we're going to be talking about overlapping our breaker, our order block, and our fair value gap. So to recap the breaker, if it's a bearish breaker, so if we're looking for bearish prices, we will take the buy stops first, then we'll take those sell stops. Then we'll wait for some measure of retracement depending on the liquidity that's around it, look for a continuation. Same thing for a bullish breaker, but we want to see those sell stops taken first. Then we want to see the buy stops and the retracement trade off. For a bearish order block, we're looking at the open, the low, and that mean threshold. And again, the low is the trigger. For a bullish order block, we're looking at the open, the high, and the mean threshold. Again, that high is the trigger. So here was the example of the bullish order block. Triggers there. Here was the example of the bearish order block. Triggers here and trades back. For our fair value gap, we just have to have a gap where there's no wicks touching right there. Then we look for them to fill it and trade the opposite direction. So step one for this setup, right? We've now laid out pretty much an entire setup. Step one, we have to identify our buy stops and sell stops. Make sure you're taking notes on this one. Step two, we have to wait for them to be taken to establish a direction. So now our buy stops have been taken. We cannot take a trade yet. We're waiting to see if there is a possible transaction or not. As you get more advanced, yes, there are things where you could start selling into these rallies. But for now, we have to wait for this transaction to play out. So our buy stops are taken. Now our sell stops are taken. Our plan is to look for a bearish breaker now because our buy stops and sell stops have been taken, and our buy stops were taken first. And we're looking for a bearish order block, being this last up close candle. Why wouldn't we use this candle? Because the wicks are larger than the body. So we're going to be looking at this last up close candle here. And now, not only has our breaker been triggered, why? Because we gave our stop hunt leg, triggered the buy stops and sell stops. So we're looking at that last bearish leg before the rally. So we have our breaker and we have our order block ready. So step three, we're going to identify our breaker. Again, we're going to look at the low, the high, and the 50% of those levels. Step four, we're going to identify our order block. I identified the trigger, the open, and the mean threshold. Now we identify our fair value gap. Again, between that first candle and that third candle, there are no wicks trading up into it. So now we wait for a retracement into confluence of those levels. So it trades back up into it. Now we can start looking for our short. Again, the sweet spot right there on the breaker is generally my favorite. So we blend them all. We have the breaker, order block, mean threshold, sweet spot, fair value gap. And it fills all of those three. We fill the mean threshold, we fill the sweet spot on the breaker, and we fill this gap here. So now we have a range from premium to discount, high to low, and they begin trading down. So that would be our first target. We would look to go short in here, stop up here, and our first target would be this original low because that's where new sell stops would be. So they trade toward it. Now we would look down and to the left, and we actually had a target here, and it trades into the target. That is the blending of all three of these aspects. And we'll talk about a couple more aspects, how to turn these high probability setups into even higher probability scenarios, and how you should utilize them based on your sessions.